of derivatives, whether it's the premium membership. You have other revenue generators. You have other pillars that are being put in place that feed into the value of the LEO ecosystem. And of course, LeoStrategy, from a token perspective, a LEO token perspective, has been using their profits, their proceeds, the money generated from the creation of their derivatives to purchase LEO, put it on the balance sheet because it is a treasury company and it's a permanent capital lock situation where whatever goes in stays on the balance sheet, it stays in there, and it's used in, much like a burn, it's off the open market, but it's generating more LEO. And this is done by staking on LeoDex, and it's generating some USDC. Then it's also done by some of the other areas where there's compounding revenue generation, and they just keep feeding the trough to suck up more and more. There was a purchase yesterday by LeoStrategy and a staking of 70,000 LEO. And there was still a lot of the day left. Said, is it possible to have 100,000 LEO purchase day? It might get close with some of the alerts that have been showing up here. So just think about that. And I put up a thread the other day, and it was just simple. Think out a little bit. 100 days isn't long term, but in the crypto world, that's a lifetime. And I think I said it was like a 21,000 purchase day, which isn't a huge day by any stretch of imagination, but 21,000 LEO purchased by LeoStrategy. If it does that on average every day for 100 days, that's 2.1 million. That will put LeoStrategy with 5.5 million LEO on their balance sheet by roughly the end of January. And I know that's lower than the goal, but just think about that. 5.5 million on what that time probably will be a 29 million float. So just shy of 20% by the end of January. Where will it be the end of December 2026? This is where even having just some medium-term thinking, you can sit there and say, holy crap, this can get rather large. So anyway, Cal, good to have you on here. So how you doing? You've been a little busy, I see.
Hey, yeah, thanks for having me and doing this. I just got the recording going, so we're good on that front. Been pretty busy helping LeoStrategy with the cross-chain launch of both Surge and LSTR. That's been a lot of fun to help with, and then obviously doing all the normal stuff for LeoDex. But yeah, we got LSTR and Surge on X, so now you can trade those directly. And that was kind of like a big part of this whole vision for things, which is LeoStrategy is kind of tokenizing the world, and LeoDex, you know, our team is building out what we want to be the number one best DEX for crypto. This actually started to kind of formulate in the last few weeks after LeoStrategy started talking about RWAs, real world assets. I started to realize that the LeoDex and LeoStrategy are really the convergence of the same mission, which is to build the best DEX in the world. Part of that mission includes getting all assets tokenized and on-chain. A lot of assets aren't on-chain yet, and if they are on-chain, they're kind of inferior to the real-world version. So what I've realized is by building LeoDex and building the best DEX we can build, we've actually created a launchpad or platform for LeoStrategy to succeed with all sorts of assets. I'm kind of looking at LeoStrategy much differently now than I was before, and I'm happy to get into that. But that's been top of mind for me lately. And then obviously getting everything done for the LSTR and Surge launches on cross-chain has been a lot of fun too. I'm enjoying everything, and I feel like we're kind of at the beginning. I know people are looking at the Surge launch as the pre-sale sold out last Sunday, and now it's live. And I feel like people are kind of like, oh, well, now it's live. And, Surge Surge selling out from the pre-sale is like a birthing event. Is your life over when you're born, or has it just begun? So I think people need to change their mindset a little bit about how Surge works. The pre-sale is exactly what it sounds like. It's a pre-sale. So once that pre-sale is over, you have the post-sale, which is, not a sale, but just the open market. So there's a long journey ahead. And I like that you always, zoom out and remind people to look, whether it's 100 days or even longer, and look at the big picture, because a lot of people get stuck in these 1 day long or 1 week long mindset, especially in crypto. But when you zoom out, you kind of see a much grander thing that's happening here, where LeoStrategy is essentially the tokenization launchpad, and LeoDex is the platform that can bring all the users and converge all the volume.
Indeed. The first thing is, let's talk about LeoDex a little bit. Let's throw up some numbers. And many people have gone to the fact that So far today, and there's still like 6 or 7 hours left in the day, according to Xscanner, X has done 7.09 million in swaps. Now, I just want you to think back to, I don't know, May, if memory serves me, June, somewhere in that time frame. Cal was talking about his goal of having, I think, $4 million in volume in a month. Maybe it was 4.5 million, somewhere in that neighborhood. This is 7 million in one day. Now, obviously, we're not talking about this being a daily situation. We don't do 7 million every day. And if somebody was watching earlier, or if you go and you scroll down to the wallets, the 7 million was done by one person, and it was flipping from ETH to Bitcoin. It was somebody who feels that the alpha is going to be with Bitcoin over whatever period of time this person is looking at making the trade. But there's a couple things that I notice here, and this is very important because people look and say, well, it only generated $48 in trading fees. And wouldn't it be nice if people actually, if that generates some money? Think of it as a marketing cost. This is about confidence. And when you have a whale who's willing to use your DEX to trade $7 million in like an hour and a half, and the person just went through and did a whole bunch of different trades, and it generated zero in affiliate fees. But it puts LeoDex as the second leading DEX, or the second leading app on the day, according to Xscanner. That person did 7 million in volume in 35 trades. But there's another account, another wallet, that did 12,000 in trades, but they did 37 swaps. So an important number is the number of swaps going through. We have 109 swaps today. It didn't generate any affiliate fees, but that is confidence. Now, Cal and I have talked that we see days like this, and we see big moves, and we see multi-million-dollar trades, whether it's one trade or through a series of trades, when there's big Bitcoin moves. We've noticed that. We saw a number of big trades of Bitcoin at about 125,000. Now we see 7 million in Bitcoin trades at 103, 105, wherever the hell Bitcoin's at. So there's some traders who are on LeoDex. This is all about making LeoDex a pillar. And as more things are added, as more assets are added, as more pools are added, which, by the way, a lot of this stuff out of the pools does not show up on Xscanner, but it's in there. And so as people start accessing more pools, as we talked about with perpetual, there's nothing, I mean, we don't even know how much is going through there each day in perpetuals, at least I don't, because there's nothing really to monitor it at this point. It's just so new on that they don't even have any site set up where it's just an oracle telling you what goes from where. It's just all, you just look at what was dumped in total. And that's going to grow over time as these get more and more accepted, and as there's more contracts out there and people are trading more and they learn more about them, the volume will grow. So that's the first thing that I think we have to keep in mind with LeoDex is, again, stepping back. Forget where LeoDex is now, which, by the way, LeoDex is miles ahead of where it was a year ago. But where will LeoDex be at the end of 2026? And this brings us up to a question that Tokenized had, and we've talked about this, Cal, you and I, a little bit. He asked, would like to know a little more about this RWA, real world asset thing with LeoStrategy. I'll give you my view, and then Cal can jump in, and maybe he has a little more information, maybe he doesn't, but he can give his view. This is based upon a conversation Cal and I had. I've sent out, I don't have any contact with LeoStrategy. I don't know where they're going. This is just my own speculation. This is stuff Cal and I have bantered back and forth. I don't know what the reception is, other than in general, they like the idea. So I don't know where LeoStrategy stands with any of this. But when I look at real world assets, the first thing I look at is stocks. Because when you look at the stock market, the United States equities market, much of the world does not have access to that. So how would somebody like to own? And what I did is I looked at the top 10 market cap stocks, and most of them are technology. You got Meta, you got Broadcom, you got Amazon, you got Tesla, you got Nvidia, you got Microsoft, Google, Berkshire, and Saudi Aramco, I think, are the only two that are in there that aren't tech. And I might have missed somebody. I don't know if that's 10. But the point is, the significant portion of these are all tech companies. And they're volatile as hell, which is a good thing for Leo with the idea of these market makers, which then can go into about that, because a couple of the market makers went live and have been generating a significant amount of revenue for their first week or 2 weeks in operation. So that seems to be going real well. But a tokenized asset from LeoStrategy would look like something like, and I've been using Tesla because I'm a Tesla shareholder, and I think Tesla is a company that has long-term potential, and it gets a lot of media coverage. It's volatile as hell, and many people would like to get some exposure to Tesla. Another one is Nvidia. Cal threw out one. I don't remember whether he did it in DM or I think he did it on Thread, so I'll say it anyway. But how about a situation with something like SpaceX, which actually isn't traded on the U.S. markets? That's actually a private deal, although he said, I think Robinhood has done a derivative on SpaceX or some type of product there. But what it basically is a pegged token, if you will. Let's take Tesla. So we have a Leo pegged Tesla token. And so what it is designed to do is it is designed to chart the price of Tesla. So if Tesla goes up, obviously the tokenized version goes up. If Tesla goes down, obviously the tokenized version goes down. And so then the behind the scenes stuff is there's other things that will be added to assist in your peg, such providing more tokens on the market or buying more tokens off the market or adjusting the rates. There's different ways that you can do this. And actually, Cal and I had this conversation when we were looking at MicroStrategy, and MicroStrategy did something very interesting. And I don't know if he had glommed onto it before this. I had not. And it was the first time, and I'm like, yeah, that makes sense. Where there's two sides to all of these that you can adjust. You have, let's take a yield asset, which yields, let's say, 15%. So you have 15% yield, so the interest rate is fixed. So what happens? The price of the asset moves up or down. Well, what happens if you reverse that and you keep the price of the asset fixed and the interest rate moves up or down based upon the market? And that's what MicroStrategy has done with one of their products. I said to Cal, they effectively created a stable coin, is what they've done. I mean, it could work as a stable coin. Now, obviously, this is through the traditional market, so it's not tokenized, but the same concept would apply to basically creating a stable coin. Instead of using asset backing, you use market fluctuations and you allow the rate to fluctuate. So when you're starting to look at a world asset, again, we'll just take stocks. How would you like to go to LeoDex and be able to buy a derivative of Tesla, a TLSA token or whatever they use, LTSLA just as an example, or LNVDA, or L SpaceX, or L Amazon, or L Apple? These type of derivatives that are housed and track the pricing and performance of the actual stock. So if you are bullish on these companies, you can invest in it, you can use your crypto to buy it, and then you can hold it. If you're a trader, you can obviously just enter and exit and buy and sell as you see fit. And what does this do? Well, this adds volume to LeoDex, number one. It allows for pooling through, same as Surge and LSTR were just put on there, and then the pool for Surge created. It allows for what Cal and LeoStrategy and some other people, Michael Saylor, have talked about, volatility capture, where they go in and you arbitrage the volatility, which these high-flying tech stocks, they're volatile as hell. And this generates revenue, more revenue for the ecosystem. And of course, when they sell the TSLA or the Nvidia or the SpaceX or whatever it is, let's say it's a $50,000 release. So all of a sudden now they put out $50,000 in TSLA stock. Well, that's $50,000 that goes and buys Leo. And where does that go? On the LeoStrategy balance sheet. Rinse and repeat. Interview with Pomp. And he was talking about the insurance industry and how they could actually tokenize the risk that insurance companies take on, because that's what they effectively do with the funds that they create. And that could be tokenized, and people could actually invest in or buy in the risk that these pools create. And, obviously, if there's a hurricane and the pool gets wiped out, well, then you lose your money. But if it's not a hurricane season and the pool doesn't pay out in claims, now all of a sudden you won the risk bet, and the value of the token can appreciate. So there's a lot of different ways that the tokenization of real world assets, people have talked about real estate. That's going to be something. And, there will be, and I think we've already seen it. Mike Novogratz with Galaxy has, I think it went through, or he filed for it, to take some of their actual stock and have that traded as tokens. Now, that is not a derivative. That's actually the stock, and that has to go through the SEC, and it has to go through the traditional financial institutions. So that basically is just playing in the same arena. And it's like, okay, so now Morgan Stanley, instead of buying 1 million shares of Galaxy stock, they can buy 1 million tokens. Well, it's basically the same pond that they're swimming in, and none of us are really invited, or at least the majority of us aren't really invited. So this is a little bit different in that it's a derivative. You're actually not getting any of the rights and representations associated with the stock through this token, but it is a way to bring the tokenized assets into being.
Yeah. Can you hear me?
Yeah.
Cool. The real world asset point, I want to echo on where you were at there, is what I think we've realized with LeoStrategy, and I've been obviously talking with them a lot, and really what they brought me in for a few months ago was to be a very high level kind of visionary perspective of things. Is like, okay, well, is this a good idea? What is the best way to do it? Et cetera, et cetera. My discussions with them are obviously very much around like, are real world assets possible to do? And if they are possible, what's the best way to do them? And then kind of scoping out the vision, working on essentially like a document of like, and if you want to kind of envision the process, start with an idea, then you create a document, then you edit the document continuously to try to find, any holes in the idea and how it can be better. And then you just keep refining and refining and refining. And then eventually you get the thing live. So I think the first real world asset will come out soon. And what is also exciting is that it is a launch pad. So you can just copy paste that framework. And really, I mean, you could foresee 100 or 1,000 of these assets being released over the coming 10 years. You could have a gold tokenized derivative. You could have a Tesla one. You could have a SpaceX one. What I've just covered in those three is literally you've got a commodity, you've got a public equity, and you've got a private equity. So there's really the entire multi-trillion-dollar market of assets. It has just opened up not only to LeoStrategy, but also to LeoDex. And Leo as a token is the ultimate beneficiary of all of it. So for example, let's say a tokenized Nvidia were to be released. You don't actually have a claim on Nvidia stock. Robinhood is doing this with SpaceX and OpenAI, which are both private equities. So what you have is not a claim on the underlying. What you have is a derivative that is loosely based on the underlying. So in theory, over long periods of time, it will trade correlated 1-to-1 or close to it with the underlying asset. So in this case, let's just use tokenized Nvidia. You would have a tokenized version of Nvidia, and that stock, or that token would trade somewhat correlated to the Nvidia stock. Over long periods of time, you should reliably know that it will move with Nvidia stock. So if Nvidia, just keep things really simple, if Nvidia is trading for $100 today, and 2 years from now it's trading for $200, well, the tokenized Nvidia should go from 100 to 200 from today to that point. So that is kind of the vision. It's a derivative, right? You don't have a claim on the underlying, but you do expect it to correlate with the underlying. What I think is fascinating, and this is where the high level vision stuff started getting me excited, is when I realized that what LeoStrategy is building is essentially like an obsidian bedrock balance sheet of assets. And those assets are just Leo, right? So it's one form of collateral, one form of asset, and it's Leo on the balance sheet. And that Leo is permanently staked and is never sold. And that Leo is then used as collateral for all the assets and derivatives that LeoStrategy creates. So the LSTR equity represents, I actually posted a diagram essentially of a vertical stack of assets. I posted that on X a few days ago. And it shows the asset stack for LeoStrategy. So you've got Leo at the base of the stack, which is the collateral backing everything on top of it. And then you've got LSTR above the Leo, and that is the equity that represents, shares in LeoStrategy. And then you've got real world assets, which obviously, haven't gone live yet. And then above that, you've got fixed income, which is Surge, which is a fixed income instrument. And all of that is collateralized by the foundation or the base, which is Leo. So what gets interesting here is as LeoStrategy expands its balance sheet, not only are more LEO tokens in token terms getting added to the balance sheet, but the USD value of the balance sheet is growing as well as the LEO price goes up. So as LeoStrategy accumulates more LEO, it's not only it's increasing the USD value in two ways. It's adding more actual tokens to the balance sheet, and the value of those tokens should in theory go up over time because LEO is a scarce asset, and as long as there's demand for LEO, it will rise in long periods of time, very similar to Bitcoin. So with LeoStrategy, with LeoDex, obviously, and then you've also got in Leo, you've got many forms of demand that are flowing in and buying the LEO token. Over a long period of time, you can expect that LEO will be worth more. I kind of predict that LEO will appreciate by around 150% or so every year for the next 10 years. LeoStrategy is basically giving a bear case that it's going to go up 100% every year for the next 10 years. So that is a very similar mindset to what MicroStrategy does with Bitcoin, which is to say, they expect Bitcoin to go up 30% a year for the next, I think he said like 21 years or something. So if you assume that, then anything you can do to acquire more Bitcoin that costs you less than 30% a year makes sense, right? Because if you're paying less than 30% a year and you're buying something that goes up 30% a year, then you make the spread. So if, for example, MicroStrategy has Stretch, which is essentially like a money market tokenized fund, you could look at it as, which is on the stock market, but they're paying like a 10.5% yield to buyers of Stretch. And in exchange, they're using all the raised capital to buy Bitcoin. And they're basically saying if Bitcoin goes up 30% a year, then we make the 19.5% spread of Bitcoin going up faster than the 10.5% interest rate that we pay. So effectively, it becomes a trade against the dollar because you're buying Bitcoin assuming it's going to appreciate faster than the dollar depreciates in value. And if you're right, you make the spread on that. And LeoStrategy is essentially doing the same thing. A lot of people ask, well, how do you afford to pay a 15% yield on Surge? LeoStrategy raised capital to buy Leo. If Leo performs more than 15% a year, then they make the spread. So any percent that it is higher than 15%, LeoStrategy as a fund, as a whole, is making that spread as profit. So, if Leo appreciates 100% a year, then you've got obviously 85% gains on just the Surge part of the stack. So anyways, my long-winded point is, what LeoStrategy is building, and we kind of got into this with the real world asset discussion, is a capital structure where Leo is the base asset. It is the collateral for all the things on top of it. And as LeoStrategy releases products, those products are individually profitable. So that's kind of a key part of things is if you release something like Surge, ideally you can release it and then also be profitable on it through things like market making, which they already are, which is pretty wild to see. So now you get into something like real world assets. So again, with our example of tokenized Nvidia, LeoStrategy can release a tokenized Nvidia. That tokenized Nvidia would be collateralized, over collateralized by Leo held on their balance sheet. So for example, let's say they release $100,000 worth of tokenized Nvidia. If they collateralize it with say $150,000 worth of Leo, well, it's 1.5 times over collateralized. So basically Nvidia, tokenized Nvidia holders will know that in a liquidation event, they'll get paid 1-to-1 with the Nvidia stock value to their tokenized Nvidia based on the Leo on the balance sheet. So all you need to do then is track one vault, and LeoStrategy's published their vault address, and it's held as SLEO on LeoDex. So all you have to do is track that vault and say, yep, my tokenized Nvidia is still over collateralized, or my Surge is still over collateralized. And then you just make sure that everything's over collateralized, and then they can essentially just rinse and repeat and continue to launch more products. Then the question becomes, how does LeoStrategy create an asset, a synthetic asset like tokenized Nvidia, and have it correlate to the Nvidia stock price without allowing redemptions, right? So the way that these are designed is that they're synthetics, like we were talking about. They don't have a claim on actual Nvidia stock. They just are designed to correlate with Nvidia stock. So how do you create that correlation? And this was a discussion that we were having the last few weeks of how do we create something where there's correlation between Nvidia stock and tokenized Nvidia by LeoStrategy. And where we landed is, well, how does for example, like the Fed, how do they govern the value of a dollar? How do they try to manage inflation? Because all they're really doing is trying to create a certain type of correlation. So that fundamentally, like from a first principles standpoint, there's no difference between what the Fed does with the dollar than what, potentially LeoStrategy could do with a tokenized real world asset. So where that got us to was a very interesting discussion around basically having an interest rate policy and using that policy to create correlation. So essentially the design is you launch one of these tokenized assets, there's a base interest rate, which is going to be very low when it's correlated. So say, 1% is the interest rate. So if tokenized Nvidia is trading in lockstep with Nvidia stock, the interest rate for holding tokenized Nvidia might be something like 1%. And if that correlation depegs to the downside, then for every, say, 5 to 10% it depeg, you increase the interest rate. Let's keep things really simple. Let's say it goes 10% below the correlation to Nvidia stock. So say Nvidia is trading for $100 and tokenized Nvidia is trading for $90. And then LeoStrategy would essentially have a rate policy meeting once a week, say every Monday, and they would increase the interest rate by just say from 1% to 10%. So the interest rate for holding tokenized Nvidia is now 10%. And it was 1% when it was correlated, 1-to-1. So now that it's depegged 10%, that increases demand for people to buy tokenized Nvidia. And it should, in theory, drive the price of tokenized Nvidia back toward the 1-to-1 correlation. Because as it goes back towards that correlation, there's future policy meetings where the interest rate is decreased proportionally. So let's say, it goes down to $90, Nvidia is still trading for 100. Then people start buying tokenized Nvidia because, they know, and all of this stuff is very self-correcting. And it's almost like a self-fulfilling prophecy, because if everybody knows that as the price of tokenized Nvidia goes down, the interest rate goes up, then they know that if they buy it, it should over time regain its correlation, because essentially the interest rate will just keep going up until the demand is high enough to send tokenized Nvidia back to its correlation. So you're essentially, everyone will try to front run each other, and you'll create a marketplace where people, basically self-correct the peg just by trying to front run the interest rate policy. So it's really important to have a clear and predictable and transparent, interest rate policy around this, because that creates the front running, which then actually self-heals the peg. If you just think of it this way, you've got a peg, 1-to-1 correlation of Nvidia to tokenized Nvidia. As it depegs to the downside, you then increase the interest rate, which increases the organic demand, which then organically sends it back towards its peg. And then the interest rate obviously comes back down to where it was. And that process just continues every single week. You create a synthetic asset that is, one, over collateralized by Leo on the balance sheet. So everyone has, security knowing that, their tokenized Nvidia can be essentially, if it is liquidated, it will be liquidated at 1-to-1 with Nvidia. So the over collateralization through Leo is very important. And then two, you don't have redemptions because it's a synthetic asset. So you don't have things like bank run risk, because, for example, people can't just buy up a bunch of cheap tokenized Nvidia and then go to LeoStrategy and say, hey, I want to convert this back to Leo so I can take that Leo. They can't do that. There's no redemptions, right? So there's no bank run risk. And then as interest rate policy organically brings that demand back up to where it needs to be. Leo can be the foundation or the collateral for tokenized assets that live on top of LeoStrategy's balance sheet. And then LeoStrategy releases cross-chain pairs, which then has a competitive advantage to market make all those different pairs on different chains. And then that generates profit, which then pays the interest rate for all the different assets. And then any leftover profit buys Leo and continually over collateralizes the balance sheet, because every extra Leo added to the balance sheet collateralizes all the assets on top of it. So that actually creates an environment where the more assets that get released, the more secure and over collateralized all the previous assets are.
I think this reverts back to the important point that we've talked about from the get-go, is Leo per share. And the amount of Leo, there's 100,000 LSTR out there. And what is the Leo per share? Because the LSTR relates to LeoStrategy. And I think with like 33.4, 33.5 million out there on the balance sheet of LeoStrategy, simple math is that's somewhere around 34 or 35 Leo per share. That at some point is going to get to 50 Leo per share. Some point past that, it'll get to 60. At some point past that, it'll get to 70. How does it keep growing? Well, it keeps growing through what Cal just mentioned, through the production of new products, the sale of those products, generating people buying either with Leo or with Hive or however it's purchased. They're buying these products. They're buying the Tesla stock, the Nvidia stock, the whatever stock is out there, and they're using that revenue to buy Leo and put it on their balance sheet. That increases the Leo per share of LSTR. But the other factor that I think is crucial to mention is the revenues and the money that flows in, for example, from the market maker. And Cal, maybe you want to hit upon this because this is a crucial point and it leads into something else with what's been built the last few days with LSTR and Surge on base, and with the pools that are built and the ability to go from LSTR to Surge and from Surge LSTR directly, which you cannot do on Hive. But when you start to look at the market makers, and if you followed some of the posts put out by, or threads put out by LeoStrategy, some of the threads that Cal has rethreaded and stuff like that, where you see the tables and they're generating 30 cents, 50 cents, 70 cents on these trades, well, that adds up. And all of a sudden you see LeoStrategy say, well, off of the Surge market maker, we earned $70 in the last 16 hours. Well, what does that $70 do? That $70 is revenue that is going to be used, and it purchases Leo. Compare that with MicroStrategy. What does MicroStrategy have? I guarantee you they got a huge payroll. They got huge expenses. I guarantee you every product they bring out, they got reams of attorneys they have to pay, because they have to follow all kinds of shit with the SEC, and they got to make sure there's no blowback, and there's all their disclaimers, and they're indemnified 6 ways to Sunday, because in the United States it's a lawsuit haven. They have rent, they have all this stuff, telephones, everything under the sun. They're running a business. Now, I'm not saying that LeoStrategy doesn't have some expenses, but if you try to compare the expenses, so now you have revenues coming in. What's the profit margin on MicroStrategy versus LeoStrategy? MicroStrategy, what's their profit margin? Even if they're doing well, it's probably 60%. If they're doing great, that means 40% is just going to cost. Well, that's not going to buy, that's revenue that's not going and adding to their balance sheet, which, by the way, actually on its core business, MicroStrategy loses money. Think of that. So they're not getting a 60% profit margin off their revenues from their core business. They're actually losing money. So this is key when you start to look at these, and I'll focus on the market makers because that's been talked about, and those rails are growing. Now you get the pools. Now you get more assets trading against each other. We already have Leo on about 4 different chains. You start to look at the different pairs that are being swapped. You're going to be up to like 30 pairs being swapped of different assets. LeoStrategy is making money off of that. This is revenue that's coming in to buy the Leo, to increase the Leo per share, which then feeds into what Cal was talking about, the overcollateralization. How the hell can you overcollateralize at 150% on an asset that you sold out at 100%? So if you sell $100,000 worth of, what do you say, Nvidia stock? If you sell $100,000 of Nvidia stock and you back it with $100,000 worth of Leo, A is the price goes up 50%. Now you're over collateralized by 50% in USD terms, which is all anybody gives a shit about. But there's another way that this happens. The revenue streams come in and they keep putting more Leo onto the balance sheet without putting any other liabilities, just to keep the accounting consistent. So it adds more revenue and adds more to the asset side of the equation, more Leo, without adding any more liabilities. Hence the Leo per share goes up, which also then helps to outpace the liabilities that are added by putting these new products out. So that's how you can add to the overcollateralization. And when you start to look at the percentage versus a MicroStrategy where their core business is not making any money, and you just look at these market makers, and Cal has alluded to on the AMA that MicroStrategy is in a market maker business too. The problem is, look at the pools they're in. I mean, they may be market making against JP Morgan or BlackRock. I mean, who the hell knows who they're up against, or Citadel, probably one of the biggest market makers out there. So this is something to keep in mind, and look at those threads when LeoStrategy posts them about what they're doing with their market making, because that's huge. And so now what Cal was saying, if over the next 10 years you have 1,000 products that it rolls out, let's say real world assets that are tokenized, and now you have 1,000 different assets that have pairs on, let's say, 2 or 3 or 4 different blockchains, a national amount of blockchains, you're looking at 8 or 10,000 pairs. How much money can that be generating a day? So that's where seeing LSTR, seeing surge on base. I know it's important from the pooling aspect of things, Cal, but if you could also maybe talk about the market making aspect and the swapping aspect, and you have an LSTR surge pair, which then I presume could be market made against the Hive engine LSTR and the Hive engine surge, even though they don't trade against each other, but there could be arbitrage opportunities with the LSTR surge pool pair discussed and I presume is being actively worked on. And that leads into what I started when I talked about this idea of moving away from labor to capital and how automation is projected to change things. I know there's some debate about this, and there's still a lot of people who say, no, technology will create more jobs and this AI stuff, it's a bubble and all this. And fine, okay, if that's where you stand. My view is labor as a part of the economic output equation is going to be declining. Trading your time for resources, i.e. money, is going to decline. Having stake in some of this stuff, having the ability to autonomously generate these revenues and to own a piece of the action, which you can with the LEO token, which you can with the LSTR token, that is invaluable. And that, I think, is how we combat the potential of job loss. Then it's just a matter of scaling and how big can this get. Now, I'm not going to sit here and say that LeoStrategy or Leo is ever going to compete with Mike Bitcoin or any of that. I'm not saying it. I'm not going to be that unrealistic, but can Leo be a $1 billion ecosystem? And with autonomy, with AI, with Rafiki, with market makers, with a lot of this other stuff, that is not outlandish. And a $1 billion ecosystem in any one of these areas is a nothing burger. Think about that. What is a $1 billion language model or chatbot? It's a nothing. OpenAI just had an employee raise $500 billion. OpenAI is going to be a $1 trillion company. Then you look at a DEX. What is Uniswap trade at? I mean, I don't know. What's the cap of Uniswap? It's easy to look up. You don't have to necessarily look at the Citadel numbers as, oh, well, that's a target, but take a sliver of that. Then combine all this together under one ecosystem and say, could the Leo token have $1 billion market cap? Well, do your simple math and see what that comes out to. That's the major difference. And that's where I think people have to understand you get involved. Then the final point, Cal, let's touch upon this. I know you had a timing issue, but one final point that I want to make. Here's the difference. You buy Tesla stock, you buy Amazon stock. Yes, you can go out and buy a Tesla car. Yes, you can shop at Amazon, be Amazon Prime. If you own Home Depot stock, you can go buy your screws and lumber at Home Depot. But what can you really do to affect the company? Yeah, you can make videos about Tesla on YouTube. Fine. Is that going to affect anything? No. You can go to X and talk about Tesla. Is that going to affect anything? No. But with Leo, you can actually have impact. You can actually feed Rafiki. You can actually go and take screenshots of Leo decks and go on X, go on Instagram, go on Reddit, go on wherever the hell you go on to. Talk about Leo. Talk about the fact that it had $7 million in trading volume so far today. These are simple things that can be done. And, this is the idea of community. This is the idea I've talked about for over 3 years now, ownership. Take ownership of the ecosystem. What are your thoughts, Cal?
Taking ownership is really what crypto is all about. If you go back to why we're all here in the first place, most of us, if not all of us, came here for some level of ethos around crypto, the promise of democratization that Bitcoin originally offered and still offers today, but altcoins offer in a more niche capacity. With that, kind of like the Spider-Man quote, with great power comes great responsibility. If you want to live at the center of democratization, then you should step up and do your part for it, and don't just be a spectator. Crypto is a participant sport, right? It's not a spectator sport. If you want to be, truly in this industry, I think you need to be on the field and actually doing things to push the industry forward. While things like Bitcoin have reached a $2 trillion market cap and are in the mainstream now, Things like Leo are super fringe. The point that you're getting at is you may own Home Depot stock, but what are you really going to do to affect the company? You could be the biggest proponent of Home Depot in the world. You're probably not going to have much of an impact in moving the needle forward for them as a company. The difference with something like Leo is, not only is it smaller, so your impact is much more widely felt, but because it's digital and lives on the bleeding edge of technology, it really does take one person to change everything. If you, like, for example, today, the largest swap volume came from one person who did $7 million worth of Bitcoin swaps today. Imagine that. I don't know who that person is. I don't know how they found LeoDex, but imagine if one person from the Leo community was out there on X badgering people to use LeoDex, that it has the best swap rates and it quotes 6 different protocols and it's built by a trusted team and community that's been around in the space for 6 years. And they built a social media app and now they're building a DEX. They gave them the whole spiel. And then now that person went and traded $7 million on the DEX. And then by way of them trading $7 million, it creates a domino effect where LeoDex is now at the top of the DEX interface charts for Thorchain, which then means that other potential whales are out there and they look for who's the biggest and most, because they equate trust with biggest, right? Like if this interface is getting $10 million a day in swap volume, they're like, yeah, well, if other people trust it, then I trust it too. And that's just how humans work. It's basic osmosis. Like it's everybody who looks at other people in humanity is going to kind of follow the leader. I think a lot of this game is not underestimating the impact that one person can have. I like that you've been harping on this for the past 6 years since Leo has existed, talking about getting involved in the community and just doing your part to try to grow the ecosystem. And I think Task is probably the most perfect example of that, which is, he's a community member, he's a token holder, he does this Lion's Den every Friday, he does a lot on Threads and on X. He is the most active person on X, by the way, that talks about Leo and LeoDex. I think he gives me a run for my money in terms of talking about it, but he's not on the team, right? Like he's on the team in terms of being on the community, but it's like the perfect embodiment of, if you're going to own something, then act like an owner and do what you can to grow the thing. If everyone got a tattoo that said "Be like Task," I think the Leo ecosystem would be significantly further ahead than it is right now. And you can't grow a community, you can't grow an ecosystem on the back of 1, 2, or 5 people. But if you get 100 people, that act like Task, we may have days where we do $70 million in trading volume. And by the way, 100% of the affiliate fees get paid to Leo token holders through the SLEO contract. So, being an owner is the embodiment of what Leo is about. The Leo mission statement is to democratize financial knowledge and access. And over the last 6 years, we built in Leo for the knowledge part, and now LeoDex is building the access part. And democratization is the core belief behind Leo. So people ask, why do you give all the revenue away? Why does the revenue all go back to the token holders? It's because I'm just a huge believer in the future of the world really is financialization and tokenization. And if everybody holds Leo and 100% of all the benefits go to everybody holding Leo, then that future of democratization and tokenization and financialization and all of the Asians all come together, and Leo is the core of it. So that is my rant, and my TLDR is be like Task.
Just looking at the X scanner interface leaderboard. And again, this just shows you how one day can put LeoDex in a totally different class. Number 1 today in trading volume, SwapKit, 9 million, 5.2K in fees. LeoDex number 2, $56 in fees. Thor Wallet, 5.4 million, 19K in fees. Ledger, 4.4 million, 46K in fees. Chainflip, 3.7 million, 56 or 5.6K in fees. And people say, well, LeoDex made no money. Look at the names: SwapKit, Thor Wallet, Ledger, Chainflip. After that is Rank. These are big names. I mean, who doesn't know Ledger in crypto? Who at this point doesn't know Chainflip? SwapKit. I mean, these are big names. And now Leo is being listed right with them. And if we go take a look at the 7-day, X scanner's not working real well today. So anyway, the point being, this is where the long-term mindset comes in. This is where the idea of building over time comes in, and it takes a lot of people to do this. None of us know where this $7 million trader came from. But what if we have somebody else who does the same thing? because somebody put a post out on X that some whale sees and comes to LeoDex today and says, hey, there's 7 million traded on here today. Well, I'm going to trade $1 million in Bitcoin, or I'm going to trade $1 million in whatever they want to trade in Ethereum. Now, all of a sudden, you're an $8 million day or $9 million day, and it just keeps growing. And where do you think this $7 million trader, do you think these are the last trades that this person is going to do? Do you think that's the last Bitcoin moves they're going to make? Probably not. Where do you think that person will go when they want to take that 7 million and unload it? Which, by the way, it might be 9 million by that time, because they'll sell out at 140K or whatever they're doing. This is how it grows. This is how it builds. And when you see 111 swaps, and there are some big swaps. So we have big swaps, we have little swaps. And as I said, this doesn't include what happens through some of these pools, because they're not showing up. I mean, it's showing up in the total volume somewhere, but it's not showing up on Xscanner. So this is where LeoDex keeps growing. So I'll allow you to comment on that, Cal, and then you can throw up your final thoughts and we'll close this down.
Yeah, and it is only showing 3 out of 6 protocols that we support. Xscanner shows Thorchain, it shows Maya, and recently they added Chainflip. So now it shows those 3. We also have Rango, Relay, and Near Intense, which don't show there. We are working with Rango and Relay to try to get an API from them to show the volume on the /Leo page on LeoDex. So the leodex.io/Leo page only shows the same Thorchain, Maya, and Chainflip. We don't have anywhere where it shows the Rango, Relay, and Near Intense. And those do get decent volume. By the way, all the LSTR and Surge trades go through those Rango and Relay protocols also. Did you want to say something on that?
No, it's just the point that some of the numbers we're looking at, people can get discouraged at times, but don't forget, the point is we're not seeing all the numbers because some of this stuff is so new. There's no way to pull the data like we said with the perps. So what's really going through, they don't break it out by UI. So right now, whatever you're seeing is an underrepresentation of the total volume that's being done.
Yeah, exactly. So, and it's pretty optimistic because it's, that it's always underrepresented, right? It's never overrepresented. So yeah, hopefully we get those soon. And then on the /Leo page, I have a lot of ideas for improving that. You can actually see there's an analytics tab that's grayed out on that page. And on that tab, there's going to be breakdowns of the fee earnings. There's going to be like a historical view, how much has been paid to SLEO holders as USDC, things like that. So like the analytics tab is obviously not live yet, but we'll definitely get better about showing all of this stuff in real time. And then also showing like real-time trades and things like that, which also encourage, kind of a marketing thing because, people, we were kind of talking about this, like people see other people trading and then they say, well, if other people are willing to trust it with a $200,000 Bitcoin swap, then I'm willing to trust it with my $20,000 Bitcoin swap. And that's just the way that humans think. So adding things like real-time swaps and, you go to like a company's website, for example, and they say like Jeff just bought a lawnmower 10 minutes ago. And the whole reason they have that is because it shows that if other people are buying, then you can feel comfortable buying here too. My final thing will be, in terms of LeoDex, we're just hammering away on. So right now we've spent a lot of time releasing kind of these crazy core features. Perps took us a long time and are a pretty difficult thing to build, release, and manage. We spent a lot of time building that. Now we're at the stage where we want to refine everything. We want to make sure we get all the kinks worked out with all the different wallets, with different swaps, with different routes. Right now, we're kind of in a nice little refining stage. The thing we're actually specifically working on today is balances. So we're trying to make balances load faster and more efficiently because right now we're pulling from a bunch of different APIs. You may have noticed that when you load your balances on LeoDex, it takes like 30 seconds. My goal is to get that down to like 5 to 10 seconds or less. So we're working on that specifically. And then with LeoStrategy, I do think we're going to see the real world assets come out soon. Today, they were in the Threadcast and I saw that they dropped the blog post. So LSTR launched cross-chain last night. It was like a soft launch. And then they just released a blog post like 30 minutes ago while we were on here. LSTR is now live on Base. You can bridge it, swap it, pool it on Uniswap. You can obviously trade it on LeoDex. So we added that last night and you can trade, LSTR on Base with, anything really like Bitcoin, USDC, ETH, even Surge and Leo itself. So that opens up a lot of capital, opens LSTR, maybe, and on the point of, big whales, like you got this $7 million whale, maybe he sees LSTR and he's like, what's this? And he might just grab a $100,000 chunk of LSTR and say, I'll throw a flyer on this. So we're really at stage one of a very long journey. I mean, it's crazy to see how far we've come when you look back, but it's also when I look forward, I still see a mountain with no visible summit. So I think there's just so much that we can achieve as we continue to grow. And the real world asset thing is exciting to me. So I gave more of a breakdown than I think is public yet from LeoStrategy in terms of how they're going to work and in terms of synthetic assets driven by rate policy. So I'm hoping we see that sooner than later, because I keep laughing because I keep seeing these YouTube videos and clips of Larry Fink from BlackRock and a bunch of other people that are out there in the TradFi world and are legends and recognized by the entire space, who are now talking about the tokenization of everything. You know, LeoStrategy is really building a launch pad that tokenizes everything and makes Leo the pristine collateral, you know, that benefits from everything, and then also putting it all on Leo Dex. So I'm already kind of thinking, do we add as LeoStrategy matures, do we add like a whole RWAs section to LeoDex? And I think we might end up doing something like that. So I kind of picture this, this future that we have where there's, all these hundreds of tokenized assets, whether it's tokenized gold or tokenized Tesla or tokenized Nvidia, and they're all built and launched by LeoStrategy, and they're all tradable and accessible on LeoDex. And the trading fees, that get earned by LeoDex then go to SLEO holders, and the market making profits from LeoStrategy then go to buying more Leo off the market and putting it on their balance sheet to continually over collateralize everything. So I do feel like we're at the very beginning of something that's beautifully designed and built, and there's a massive convergence happening. So thanks for having me on, and I'm excited to talk about all this stuff, as you could probably tell.
All right, we are going to close up now on that. We are at the end of time, and Cal was supposed to jump off at 10 after 2 my time.